Good morning, everyone, and welcome to today's market outlook. We saw some cautious moves across the major markets on Tuesday as traders digest fresh trade headlines, monetary policy shift, and signs of softening economic momentum. So let's dive into the key developments. Starting with the US dollar index, the dollar hovered just under 99, lacking strong direction as traders wait the latest from global trade talks. President Trump renewed pressure on India over its Russian oil imports, while the European Union stepped back from retaliation, suspending planned tariffs for 6 months to allow more room for negotiation. And at the same time, expectations for a Fed rate cut in September are building after last week's disappointing US jobs data. That's left the dollar in a bit of tug of war between the political uncertainty and potential policy easing. And on the charts, recent gains stalled after testing the 100 level, and momentum has flattened out. The RSI is holding in neutral territory, and a squeeze in the Bollinger Band suggests a new trend could be brewing, but the direction isn't clear just yet. Turning to crude oil, WTI fell for a fourth straight session, briefly dipping below the 64.5 mark. The pullback came after OPEC confirmed it will raise the production starting next month, which has reignited the oversupply concerns despite the lingering geopolitical risk. The market is also reacting to US pressure on India to reduce its Russian oil purchases, part of the broader efforts to push for resolution in the Ukraine conflict. And technically, crude remains in a well-defined range between the 64 and $72. Key support sits just below current levels, and if that floor gives away, we could see a deeper retracement. But still, many traders are looking to buy on the dips around this area, especially with prices sitting just under the long-term moving average. If we get a bounce, a return towards the upper end of the range is possible, but a clean break is needed to shift the broader trend. And over in the gold market, the price edged higher, holding about 33.75 per ounce, marking a third straight day of gains. Gold has regained some footing after last week's weak US payroll numbers revived a speculation of a Fed rate cut, which typically boosts the appeal of a non-yielding asset like gold. And from a technical standpoint, the rebound from last week's low has been strong, and prices has cleared the 33.30 zone, a key psychological level, and is now challenging the resistance just below 3400. A weekly close above that mark could pave the way for a push towards the recent high of 34.39. And on the downside, the 50-day and 80-day moving average remain important levels to watch if the price pullbacks. And lastly, the Australian dollar. The Aussie dollar slipped towards 0.6460 as markets brace for the Reserve Bank of Australia's policy meeting next week. With inflation easing and jobs as falling, there's growing talk that the RBA could cut rate even soon, maybe even at the upcoming meeting. And on the chart, Australian dollar continues to trend lower, staying below its 50-day moving average. The momentum is weak, and the pair is nearing support around the 0.6420 to 0.6415 area. If that breaks, the next stop could be on the June low. And on the upside, a move back towards 0.6510 zone would be needed to revive bullish momentum in the short term. So to wrap things up, the markets remain cautious as traders juggle geopolitics, trade headlines, and central bank expectations. The dollar is steady but lacks conviction. Oil is under pressure from rising supply, and gold is benefiting from the dovish sentiment. Australian dollar is weighed down by soft economic signals. With plenty of key events ahead, expect more volatility and fast shift in the direction. So trade smart, and I will see you in the next update.